Happy Monday, everybody. I hope you had a great weekend. As we do this time each week, let's recap last week's market action and let's preview this coming week. Markets showed impressive resilience last week, overcoming early political uncertainty to rally strongly on hopes for trade progress, dovish Fed commentary, and solid corporate earnings. Throughout the last week and looking into this coming week, political drama, Fed policy concerns, and shifting trade headlines, they will all take center stage. Here's how each day last week unfolded. On Monday, markets opened the week sharply lower as political tensions dominated headlines. President Trump escalated his criticism of Fed Chair Jerome Powell, calling for a preemptive cut to interest rates and hinting at efforts to remove Powell from office. Now, these comments shook investor confidence in the independence of the Federal Reserve, and it raised fears about long-term political stability. This uncertainty triggered a broad-based sell-off, with technology and consumer-sensitive sectors hit the hardest, while a midday rumor about potential progress in the Russia-Ukraine ceasefire talks helped to curb the worst of the losses. Stocks did still close near session lows. The Powell attacks have the dollar dropping over 1%, lowest level since March of 2022. That's a 10% move down in 3 months in the dollar, and that is a cause to take notice. The day ended with the Dow down 2.5%, S&P down 2.25%, and the Nasdaq down 2.25%. Markets rebounded sharply on Tuesday as some of Monday's worst fears eased. Remember, I told you that the market seemed to be pricing in the worst, so anything less than that, better than feared, should be positive to the markets, and that's what seems to be happening. Investor focus shift towards corporate earnings, with several major companies reporting results that exceeded expectations. In addition, President Trump's rhetoric cooled somewhat, and Treasury Secretary Bessent's optimistic comments about the U.S.-China trade negotiations did provide further relief. Equities gapped higher at the open and built on those gains throughout the day, with the S&P 500 recovering back to Friday's closing levels. Treasury markets also stabilized after a weak Monday, helping support risk-on money flows. The Dow was up 2.75%, S&P up 2.5%, and the Nasdaq up 2.75%. Stocks added to Tuesday's rally on Wednesday, helped by more signs that the political tensions around Fed Chair Powell were easing. After market closed Tuesday night, Trump stated that he had no intention of firing Powell, calming one of the week's biggest sources of uncertainty. Meanwhile, reports surfaced suggesting that the administration was considering tariff reductions on Chinese goods, fueling optimism around the global trade. Although mid-morning, we saw a brief pullback after Treasury Secretary Bessent downplayed immediate tariff cuts. A strong 5-year Treasury auction and ongoing risk appetite helped equities to recover into the close. The Dow was up 1%, S&P up 1.75%, and the Nasdaq up 1.75%. Thursday had major indexes reaching 3-week highs. Early gains were driven by fresh headlines suggesting possible tariff exemptions on Chinese auto parts and encouraging signs of U.S.-India trade talks. A mixed durable goods report initially rattled some nerves. Headline orders surged thanks to aircraft bookings, but underlying business investment metrics were soft. However, dovish Fed commentary did signal potential rate cuts later this summer, reigniting buying interest. The rally built through the afternoon as trade optimism and steady bond markets continue to support sentiment. The Dow was up 1.25%, S&P up 2%, Nasdaq up 2%. Markets closed out the week Friday with a fourth consecutive day of gains. Though the rally showed some signs of narrowing, the Dow eked out a modest advance, while the S&P 500 and Nasdaq logged more substantial gains. We'll talk about that in just a second, driven largely by strength in big tech. Alphabet's strong earnings reports lifted its shares nearly 2%, while Nvidia surged over 4%, helping offset a nearly 7% drop in Intel following a disappointing forecast. Despite the positive finish, underlying concerns remain. Consumer sentiment fell sharply in April, and more than half of the S&P 500 companies declined on the day, as executives cited ongoing trade uncertainty as a reason for withholding financial guidance. President Trump did hint at progress in trade talks with Japan, though conflicting signals from China left investors cautious heading into the weekend. The Dow was just a few ticks higher, S&P up 0.75%, the Nasdaq up 1.25%. Major averages rose on the week, notching their second positive week out of 3. The Dow was underperformed, but still cinched a 1-week advance of 2.5%. The S&P 500 gained over 4.5%, while the Nasdaq climbed 6.75%. With these latest gains, the Nasdaq is now slightly positive for the month, but the S&P 500 is down 1.5% month to date, and the Dow has fallen 4.5% so far in April. We're about to head into the last few days of April, so let's preview what this week will bring. This week is packed with significant earnings reports and economic data releases that could influence market sentiment and provide insights into the health of the economy amid ongoing trade tensions and policy uncertainties. Remember, all can be changed with one comment from the White House. Wednesday marks the president's 100th day in office. I cannot imagine this will not be marked by something. So it's also jobs week. So we'll get JOLTS, ADP, jobless claims, and then non-farm payrolls on Friday. I know that this will be watched, but I remain in the camp that this will have to change in a major way to get the attention of the Fed. More importantly, I think the earnings beauty pageant will be the most important part. As you saw late last week, this week the names just get bigger and more of them. Apple, Amazon, Microsoft, Meta, ExxonMobil, Coca-Cola, Visa, and McDonald's are among the companies scheduled to release quarterly results on the busy corporate reporting calendar this week. We will watch and listen for a lot of them. I believe that it is all about growth, and if we have hit a wall in growth, gone off a cliff, or just lost some momentum. Consumer confidence numbers have been abysmal, so we will watch for that change. We'll see if 2 positive weeks in a row can move the needle. There's a lot of other eco data too. We'll see GDP for Q1 before the tariffs started to really take hold, employment costs, manufacturing reports, housing, and we'll even get the PCE. Remember, that's the Fed's favorite gauge of inflation. If you're playing Fed head bingo at home, you can take the break this week. The next Fed meeting is next week, May 6th and 7th, so they are in blackout. So with the market still on edge, we go into the end of month 1 of Q2 as of Friday's close. Despite a strong rally in the latter part of April, all 3 major indices remain in negative territory for the year. The NASDAQ, heavily weighed toward technology stocks, has of course experienced the steepest decline, reflecting investor concern over trade tensions and policy uncertainties. The S&P 500 and the Dow have also faced headwinds, but to a slightly lesser extent. The Dow is down 5.75% for the year to date. S&P down 6%, and the Nasdaq down just a hair under 10%. Now, before we wrap this up, let's get the positive side of that balanced. Let me first start with March's S&P decline of down 5.75%. According to Zacks, since 1945, in every instance when the S&P was down by 3% or more in March, it was then higher in April. That's happened 7 times, and each and every time it was higher in April. The average gain in April was 5.92%. That would be a heck of a move given where we were at its worst. In fact, being down only 1.5% so far for the month is a heck of a move in and of itself. If the market can keep its upside momentum going, it will look like that statistic will keep its 100% success rate. And for a little perspective, regardless of how bad this has felt and the continual gray cloud reporting, the Dow is up 9.5% from their lows 3 weeks ago. The S&P is up 14.25%. The Nasdaq is up 17.5%, again from their lows. And finally, per the Wall Street Journal, April is set up to be the most volatile month since the COVID crash of 2020. The S&P 500 has moved 1% or more in 10 of the first 17 days this month. As is becoming common way to end this, strap in, keep your seatbelt securely fastened. I don't think we're going to get out of this week without some significant volatility, but we'll just have to see. As always, please keep your eyes on the goals, short term and long term, and let's stay in touch. For now, enjoy the week, and be sure to check back on Friday for the planning video. Have a great week.